Brown Show, where we talk about all things investing, options trading, and the like. Now here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to the AJ Brown Show, episode 153. Today is October 11th. My name is Cyprian Francis, and with me, as always, the main man of the hour, Mr. AJ Brown. Good morning, AJ. How are you doing?
Good morning, Cyprian. I'm good.
Good. We've got a special guest coming on a little bit later, which you probably have seen in some of the programming. But as we start today's episode, I mean, we're hitting all-time highs. What's the storyline there, AJ?
First of all, what happened in the news? Not much. We got our consumer price index, right? That's our retail inflation. Retail inflation was a little bit hotter. So that came out yesterday. People were a little bit tepid to that. We saw the market kind of stall yesterday. Today we had producers price index. That's usually not a big market mover. That's wholesale inflation. Wholesale inflation came in, also a little bit, moderating there. Nothing special. I did comb through the Fed meeting minutes. So on Wednesday, they released the Fed meeting minutes for the previous Fed meeting. There was a lot of discussions, which I think is really, where you want the Fed to be. It looks like by the end of the conclusion, it was almost split half between the Fed presidents on what they wanted to do. But, in my mind, we had this period of, deflation after the pandemic or trying to control the pandemic. So the Fed took action. And then the whole story has been controlling inflation until the last couple of months where it's started to, bring back into the fray the employment conversation. I almost feel like you want the Fed every time they meet to be discussing and really having a good conversation, at that balancing point of, keeping full employment and keeping inflation under control. That means that we're kind of at that tipping point that's good. So, I'm not sure what the market folks are thinking. When I look at my technicals, if we change, remember last week, Sip, I gave everybody a little hint on how to use the MACD indicator to really be able to look at those moving average crossings closer. You could actually hack the MACD indicator. Well, we've got these false reversals that we got, and they even had us thinking that the market had topped. But, one of the things when I look for a confirmation of a reversal is not only that we don't, for one day touch and then go back across the moving average, but also kind of the magnitude of the crossing. Like if I was to look at this in retrospect, right? This would be a crossing to me. This would be a crossing to me. This guy over here would not. This would not. This is like a little like false, right? You need to have a crossing across your moving average. This would be something I would look at, but this little guy over here, maybe not so much, right? And so this whole little thing that we had last week was just a whole bunch of like false signals as far as I'm concerned. In other words, let me change my drawing a little bit about my broad market here. If I go over here and take a look at this, and I also shut off this indicator now that we know which confirming indicators we're paying attention to and which ones we're ignoring, we're kind of back into the fray. And it's giving me more confidence that the market is comfortable where we at, with maybe like a couple more quarter point rate drops through the rest of the year, one in November, one in December. And that's, if we look at the CME in a little bit, that's where it looks like the CME market indicator is at. I was a little bit concerned that we were getting a reversal before we hit this ascending line of resistance, but with these false signals, we're actually going higher. And I actually might, sign on board. I'm not there yet, Sip, but I might sign on board with the market moving things higher, right? The uptrend continuing. Um, I'm still in the camp of waiting to see maturity. I want to go through this earnings season, but I'm cautiously optimistic for the broad market to get into another uptrend again. A couple caveats though. If I take a look at the VIX, I mean the VIX is above that median, all-time median. That's telling me that although that I'm not the only one cautiously optimistic. I'm seeing folks really put a lot of investment into options as hedges, meaning they're protecting themselves should their cautious optimistic turn against them. So that's something to pay attention to as well.
I found a really comparable graphic to what you're talking about here. Zero Hedge on Twitter basically plotted the S&P all-time high versus the VIX, and they're basically saying that we're in a unique place to be so high on the indexes, with the VIX being comparable. And I think when you look at your chart, right, with the 21 level, right, that's kind of we're in this weird gray area at these highs, and this week has indicated that we've got pretty stable economic news, right? Employment's still
Mhm.
looking good, inflation's
Mhm.
like nothing's really going wild there, which I think makes the earnings season even more important than it might have been, right? And so
Yeah.
it's good that we're going to be talking about a little bit of that later in the show. But hitting new all-time highs, the news is kind of staying the same. Inflation or the rates, it looks like you're bringing it up, might be the next discussion point, but it seems like everyone's leaning towards a quarter, which really is that going to move the market in a wild direction, or we're just getting
No,
trucking along?
the scoop is corporations, the players in the market. What they really are searching for is a sense of consistency. They want to know that the rules that they're playing the game by aren't going to be changing. And so I think that what we're seeing is that they're kind of buying, and again, earnings season will be quite explanatory, although that is going to be telling us about, what happened in the past. But I feel like investors and even the companies themselves that are all playing the game, they're all making decisions for longer duration than they have been since the end of the pandemic, basically saying, hey, we feel confident that the rules aren't going to be changing for us too much over the next few years. We can plan farther in advance, and we don't have to worry about curveballs being thrown at us. So I almost feel like there's this sense of, again, it's cautious because we're seeing that VIX be really high. I am seeing a little bit of, where we put our money into hedges, like, big hedges like gold and things. Some of that is coming back out. So there's this cautious optimism that things are, where they should be, that we're going to get, these little measured rate drops, but that we've got inflation basically under control. We've got the employment situation doing well. We're at that tipping point. We're at that like Goldilocks situation. And as long as we can keep those plates balancing, I mean, I think people are starting to feel comfortable with that, again, with that caution that we keep talking about. And again, I want to personally, I want to see it mature. I want to get through earnings season, see what they said about the last quarter, and just see some of these patterns continue, maybe get past this election. But I'm also cautiously optimistic that things are going to maybe not as aggressive, but that things are going to get back to that, seeing charts go from the lower left to the upper right.
Yeah, it's almost like on the days when we have pullbacks, it's some sort of news driven event. Like
Yeah.
we had the missiles, right? The
Yeah.
potential war. We
Yeah.
have the whole presidential debate, election the rest of the month, right?
Yeah.
So economically things are looking good. Hopefully the earnings can back that up. Otherwise, traditionally October is a pretty volatile month, right?
Yeah, it could be. It could be. But, we're in uncharted territories. I mean, I keep talking about we're about to hit that 7 trillion mark of the quantitative tightening, down from 9 trillion. The Fed, that they're throwing off that bond picture. So we're in a lot of places where you can't look back at history for guidance on what's happening unless you factor out some of the, external stimuli that's happening. But for the most part, and again, it's very cautious. People are being very cautious, but people are kind of upbeat in the markets.
And so with earnings coming up, it seems as if there may be some opportunities there. So our special guest today is going to help us find and identify those. We're going to match up those strategies with what you're doing with some of the premium selling and maybe some of these more exotic, shorter term trades, investments, because I know that was kind of the topic last week, was like, hey, let's short things up.
It's still my topic. It's still my topic. So again, because of that cautious, and I was just on a call with our program participants. That call is just so, valuable. Every Thursday we have that workshop, but we're still planning around shorter duration trades just because of that cautious optimism. We want to see some of this, transparent optimism that's visible right this minute stick around before we start buying into long duration trades. So we're shortening up the time durations of all of our trades, locking in profits early. So yeah, knowing what's going on in the earnings play, and Dan's a trusted guy, so I can't wait to bring him on.
Yeah, and so we're about at that mark. So I know you and him have a webinar coming up. So let's go ahead and just cue that up real quick. So next Wednesday, we're going to have Dan back to kind of dig a little bit more into detail on some of the things that we're going to be covering here in the next segment.
Yeah, you guys might remember Dan. We had him on last time and he talked to us about short squeezes, but Dan's an expert across the board on all sorts of topics. And his topic du jour is earnings plays, because earnings season is right around the corner. So I can't wait to have him on.
So I'm going to go ahead and throw the link to that in the chat so everyone can get access. Also, if you haven't checked out AJ's new quick links page, we've got all the good stuff here for you. We've got the link to the webinar, a link to AJ's indicator suite. Show some love on the YouTube. Show some love on the TikTok. We've got some cool things coming up on TikTok. So if you're engaged there, head on over, hit the follow, IG, Facebook, AJ's free daily workshop. If you want to be in the program, hey, we've got details for you there. If you need some custom one-on-one coaching, we've got some details there. Yeah, a lot of great tools for anyone watching. We do appreciate you guys tuning in. We're going to take a short break. We're going to bring Dan on. We're going to talk about how to make some good trades, how to make some money in earnings season, and then we'll dig into your pick of the week, our speed round, and see if the market keeps making new highs. So stick around, folks. We'll be back in a couple seconds.
Oh, you're supposed to say a jiffy.
Jiffy. Coming back in a jiffy.
Get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
So now that I see that commercial, what's funny is the big Tesla event yesterday. Did you catch any glimpses of that?
No, tell me about it.
Oh my gosh, AJ. Here, I guess maybe, if I could share my screen, there are some tweets coming up. But fully his first fully autonomous robo taxi, no steering wheel, right? That was a big one. And then he's got these robots, these Tesla bots. Like this one programmed it to bartend. And he was basically talking about how, I mean, in all the movies that we've seen, like it's here. These robots are here. This guy's serving drinks. I don't know what to expect in the future, but this is wild.
Where was that?
I think that was in Texas, but they're killing the stock today. Like Tesla's getting hammered, but they unveiled some really cool technology. So that's what comes to mind when I see you cruising around in that Tesla. If anybody in the comments or if anybody watching has some feedback on what they think of the Tesla, feel free to drop it. I'm very interested in seeing what you guys think. All right,
mean,
with that all being
I gotta say, with trading that Tesla in for that Ford Lightning, I love that pickup truck, but that's just me.
yeah, but this is not even a car. This is a robot. This is literally
Yeah,
they unveiled the Tesla robot.
yeah, that's some new tech. That's some new tech.
And the way they're pitching it is like, well, it'll do all your dishes and do all your cleaning for you. I'm like, oh,
Like Rosie on the Jetsons for if I'm not dating myself.
that's a great start. All right. Without further ado, let's go ahead and bring in Dan Passarelli of Market Taker Mentoring. Hey, Dan, how's it going?
Hey, what's up, AJ and Cyprian? How you guys doing?
Good.
Doing good.
Good.
Before we dig into earnings, we were talking about these all-time highs. You got any thoughts on where we are with the markets?
Yeah, so it's pretty interesting. Like earnings season is kicking off this week. This is going to be the most important earnings season, golly, man, that I can remember. And it's interesting because analysts, they typically, I don't know if people know this, analysts typically cut earnings expectations right before earnings. And it kind of seems to be this like game, because they all like companies typically end up beating earnings on average. So I don't know, they lower expectations so that they can get beat. But they particularly really kind of didn't like the financial sector with the low M&A activity that they've been having. And with interest rates being cut, it's really a big shock that BlackRock, JP Morgan, and Wells Fargo all beat the pants off earnings this morning and are all really, really up. With the PE ratio of the S&P 500 at 2787, we're in some pretty high territory. If earnings continues like this, that'll bring down that PE ratio in line with where it's a more normal place. But there's a lot of pressure on companies to beat earnings. If they don't, we're definitely going to see a bit of a sell-off.
Mm-hmm.
And so last time you were on, we talked about the short squeeze, so are we going? Obviously this isn't a short squeeze. This is earnings play. So how do you go ahead and get yourself into the mindset of taking advantage of that? And then AJ, how would you apply what you do and some of the things we've talked in the past to what Dan is looking at in these next upcoming earnings sessions or calls?
Yep.
Yeah, well, AJ mentioned earlier about how important this earnings season is. So like all eyes are on it. And when that's the case, it sets up my earnings trading system really, really nicely. We're going to talk extensively about it in the webinar next Wednesday night, but I'll kind of steal my own thunder a little bit and let you know a little bit of what we're going to talk about. Basically, when earnings are imminent, like, as we lead up to earnings, what tends to happen is people buy up the short-term options, especially the ones that expire like right after earnings is announced, later that week. And so when that happens, it kind of puts out of proportion what we call the volatility term structure, which is just a super fancy word for saying the short-term options get more expensive than usual, while the back-term options don't get that much more expensive. So in some circumstances, and not all, but in some circumstances, it sets us up really, really nicely for what we call time spreads or calendar spreads, so we can sell those overpriced options and buy those underpriced options. And man, it can be really powerful. There's a lot of nuance to it. That's why we're having a whole webinar next week about it. But you'll learn all about that next week.
And AJ, how did that? We've gone over specifics of that exact example throughout episodes of our show, right?
Yeah. I mean, it's absolutely brilliant, but there are so many nuances. And so, coming and getting a whole hour of just discussing about this exact strategy next Wednesday is way better than what we can do on this show. But basically, he's selling into that volatility rush. And then when it drops afterwards, when earnings is no longer on our mind, it drops almost like it crushes almost the next day, and so you basically get that money back. It's a brilliant strategy, but there are some things you got to pay attention to. So I love it. I love it, and I really invite everybody to come and spend a whole hour with Dan and I next Wednesday to learn all about those nuances and how to do it, not just see examples on this show of what could be happening.
And so the link to that webinar is in the chat. Question to both of you, I guess, is this primarily an options play, or do we have, stock, positions that complement any of these strategies?
Yeah, for me, I work under the premise, and I think it's a really good premise, that no one can predict direction as a result of earnings. And I don't know, we can talk about that. I don't know if AJ has some systems or whatever, but yeah, I kind of figured. No one can predict direction with earnings. And it stems from all those things I just talked about. Analysts, kind of play this game. Oh, yeah, no, earnings will be lower than we thought. Oh, what do you know? They're higher than we thought. And then everybody knows that. And so if they're higher, but not high enough, it sells off and nobody can predict it. So the only way that I've discovered is, I don't want to say predictable because nothing's predictable, but man, you can model it. And I'll tell you what, I and our students who trade this do a great job being able to forecast where the implied volatility crushes to. And, we just model it out and see if a time spread makes sense. I'm looking at BlackRock right now, who announced, and their volatility crushed quite a bit in the October 11th options that expired today, for those of you who are watching this live. But the volatility is still up there. It's still hanging at about 37.7, whereas the options that expire next week are down at 19.6 volatility. So still has ways to go. And that's probably because of the, 3.25% bump that it had this morning.
Yes. Right. So, SIP, it's just like we're very disciplined, right? And so we're always looking for the higher probability trade. And, for all those directional traders out there, God bless you. But the scoop is, the reason why you and I discuss about selling time premium for most of our calls is because, if the clock is no longer 60 seconds in a minute, if it's not 60 minutes an hour, if something happens and our clocks are not right anymore, we got more to worry about than even investing in the markets. The scoop is time is a very reliable. I'm going to agree with Dan that nothing is 100%, especially in the markets. But, if you're trading on time passing by, that's one of the most reliable variables. And then you and I have talked about, SIP, this reliable pattern that Dan's going to go into amazing details on next Wednesday, which is, we don't know how investors are going to react to earnings. First of all, we don't know what the earnings are, but also the market is not what the earnings are. The market is what investors react to the news about the earnings, right? So you've got like a double variable there that could go all over the place. Nobody knows, but the consistent pattern that shows up in earnings is that these folks who have their long positions or, have their positions, they're going to hedge, 3 or 4 days with these near-term options. They're going to start buying these things to protect themselves should things go awry. And so the price is going to get artificially thrown high. And so we always want to be on the right side of the equation. And so basically what Dan says, this is consistent. It's modelable. People, it's human nature that when something surprising is around the corner, that we're going to do whatever we can to protect ourselves. And so we're just putting ourselves on the right side of the equation, being the one who's selling these high priced options to these people. And then as soon as they don't need them anymore, and they're saying, okay, I don't need to have that cost on my books anymore, I'm going to sell these things back, and the price drops back down, that's when we buy to close those things. We have that back month covering position. It's brilliant, because if you want to be consistently reliable, and I think Dan will agree with this, you just always look for the consistent trade, the thing that the pattern that isn't going to change. You can't guess whether investors are going to react positively or negative, but what you can put your money on is the fact that going into earnings, they're going to be worried, and so they're going to protect themselves, they're going to hedge themselves, and they're going to be buying these investment vehicles that can be used as hedges. So put yourself on the right side of the transaction and be the seller to those people, right, Dan?
Yep, exactly. I mean, all good trading is a system. It's a system that's reproducible. I mean, it's following a recipe. We could come up with a bunch of analogies, a blueprint. If you're just guessing every time what to do, going on gut instinct, your gut's not always right. There's a lot of behavioral economic, papers that have been written on that.
No.
And so I guess the consensus here is you don't want to guess directionally whether, because I'm always confused when I see earnings, because it'll be like beat, but they're crushing the stock, and it's like
Yeah.
one word was used in AI this or that in the statement, and so they're crushing it. And so I guess what we are anticipating is that something is going to be dramatic, whether it's good or bad. We want to play the drama that comes from the news and not take a guess. And a calendar spread over how many days? A couple days? Like how long of a trade are we looking at with some of these?
It's not a long trade, is it?
No. It's a less than 24-hour trade for me, which is,
Yep.
Yeah. That's really the shortest trade that I make.
Same here.
Yeah.
The scoop is these calendar spreads, they sway a lot to the Vegas side. So, the reason why you want to come next Wednesday is you want to, know what to look for when you're picking these underlying symbols to do this. You got to track the IV, you got to understand, look at historical earnings. There's a reason why you need to be on that call next Wednesday. There's a lot more to cover. You don't just want to throw this strategy willy-nilly at every earnings, symbol coming up for earnings. Just want to make sure, there's some nuances there. There's things you have to look for. So, join us next Wednesday, because Dan's going to, he's amazing at this. He's going to go through it with you guys. He's going to give you the insights you need so that you don't, mess this up.
All right. So once again, the link to that webinar is in the chat. It's also on AJ's quick links page. Head on over there, sign up. If you can't make it, sign up still, because we'll get you the presentation afterwards as well. We're going to keep Dan on the rest of the show to give some insights on AJ's pick of the week, our speed round. Maybe there's some quick ideas that he can look at, his tools to give us some insights. And I highly encourage everyone to head on over there. 24-hour opportunities. Things are going to be going wild. Let's get on the right side and play off of some of the dramatics that we see with earnings, which is always just crazy to me. And then a quick follow-up question is, do you avoid some of the big names like an NVIDIA, where the entire market is just waiting for an earnings to sway one way or the other?
Yeah, the irony is usually the stocks that get the biggest swings are the big names. They're the ones that everybody's talking about. And yeah, they are usually the ones that I tend to avoid. I mean, I will model them out. Because, there are some that, even though they're a big name, they don't move as much on earnings as you might think they would. But 9 times out of 10, those are the ones that don't model out properly, and I skip them.
Awesome. I'm always fascinated how everyone's sitting on pins and needles for NVIDIA or Tesla or Amazon, right? And it can really push a lot of names along with it. All right. So if you're interested in learning more about how to learn the ins and outs of these strategies, get some insider tools and tips, head on over to the link, sign up. We're going to keep moving on to AJ's pick of the week. This is a name that we covered last week, which AJ seems as if we got some follow through, some potential. And so your pick of the week is a place where I will take a first date, the Cheesecake Factory, ticker symbol CAKE, cake.
Yeah, this was from Carl last week from Lincoln, Nebraska. Carl, I got to give you kudos, man. I really, really like this symbol for a couple of different reasons. So not only that, I want to just preface, this is actually one that we focused on yesterday at our, my program participants workshop. We really took this one apart, and so I really got familiar with cake. So first of all, this is in the restaurant sector. So what I've done is I've looked at the restaurant sector compared to the broad market. Remember, we've got a lot of, from the beginning of the show, some cautious optimism, possibility for trend reversal quite easily in the broad market. And so the restaurants, when I overlay, the sector to the index, the restaurants kind of follow to the beat of their own drum. They're a little bit more of a consistent move of a sector than the broad market, which is heavily, if you're looking at the S&P 500, heavily cap rated to the Magnificent Seven, which are mostly all just tech plays. So, so I feel a little bit more comfortable with a range bound strategy on a restaurant. Again, like we've been saying for the last 2.5 years of this show, Sip, it's always the boring symbols that I wind up turning into income generators, right? And so, one thing I like about Cheesecake Factory is that they're giving dividends to their shareholders. They've got great earnings every earnings season. They're never dipping into negative. I mean, this is a company that has this recipe. We talk about recipes for trading strategies. There's also recipes for how to run a good company, and Cheesecake Factory seems to be following that recipe. Just as a comparison, they're not giving all you can eat shrimp deals like Red Lobster is and putting themselves out of business at one of the highest commodity prices out there, where people come in and spend 5 hours eating all their shrimp. No, Cheesecake has it down pat. So okay, enough blowing air up the executives that run Cheesecake Factories. But looking at the pattern, they're in a nice sideways chop. You can see that we put we've identified some support and resistance here. You also notice that it's kind of diverging, meaning every time there's bottom reversals and top reversals, we're seeing it get a little bit wider. I'm not so concerned about that. The theme for the last 3 or 4 weeks has been we've been cutting down some of our duration of our trades. So that might be something that, even though I've, said the restaurant sector is a little bit better than the broad, there's correlation throughout the market. So maybe instead of planning out for a 5 or 8 month trade, we plan out for, staying in this trade for a couple of cycles. But here's what I'm looking at. I'm looking at that we're currently in the middle of the channel I identified. So, some of us took the signal. If you were watching it from Carl last week, you took that signal and you got yourself some kind of covering position in here. If you're legging into a strategy like we like to do, you got yourself into a covering position. Either you shorted it or you found that back month option that worked really well. And there were some good back month options that had some nice liquidity. We're talking out 8 months. We're talking deep in the money. So if you're in that shorting position, then you're going to be patient. We're waiting for that bottom reversal. We're waiting to put some distance between, at what price you shorted or bought that put at. And you'll go ahead and sell yourself some put premium, buy yourself a protective call 3 to 6 months out with a strike up here. And once you put on those 2 trades, the premium trade that you use to offset the call, the protective call purchase, you basically bracketed it and that position will auto adjust, right? That means that if it stays in the channel, great. You'll do it the next cycle. You'll do it over. You'll repeat but if it goes out in either direction, we've put enough distance between the covering position and where we sell the premium that it's going to be a really sweet trade, whether you get exercised or whether that protective call kicks in. So, get that range trade, get the second half of our premium position, get that married protective option in there. I think you're going to be really happy. Now, if you didn't take Carl's suggestion last week and you missed the opportunity to set up your covering position, then my other thing is and again, today's big conclusion is we need to be patient and wait for the next reversal. But as we come back down closer to this $37 mark, we'll wait for that reversal, and you can set up a covering position on the opposite trade. Now, the calls are not as liquid when we go far out of time, so I'm not going to recommend that you buy, use any sort of option substitute here. If you're going to do this, you're going to do buying the stock, which isn't a bad thing for the long term if you want to, set yourself up for collecting dividends down the line. But you're going to buy the stock in lots of 100, and I really like this. I'm really glad that Carl turned it on to us last week. I'm glad that we hashed it through in my program, because I'm resonating more with, one of these cheesecake trades. Again, under the radar, boring ass stock, unless you take your first date there or anything. But definitely one that we could turn into one of these theta decay plays. But again, a correlation, uncertainty. Maybe we, use strike prices that are a little bit more bound. Maybe we don't go all the way to the reversal signal. Instead, we use either a trailing signal or some sort of just a delta between where we did the covering position. Something, we can tighten up and make it a little bit more conservative trade. Not a problem there. So that we, favor immediate profits over having a trade that has a potential to go longer. I'm cool with that. But yeah, you guys should all check out Cheesecake Factory.
And the earnings are on the 29th, which is roughly 3 weeks out.
So yeah, I'm curious
Dan,
what
do you see anything, or when would you even start considering a play in cake?
Yeah, this is actually a pretty interesting play, because typically I would very, very seldomly put on an income trade and carry it through earnings. But that said, looking at this one, the ones that expire next week, I don't know. I like a really broad range, and I don't think that I could sell strikes far enough from the money to get enough premium. So we would be forced to hold a position going into and through earnings. But the magic is that the implied volatility of the November 15th expiration is already really elevated. The historical volatility is 36.5. I can sell the 35 puts at a 45 volatility that expired November 15th, and the 42 calls at a 38 volatility. I can bring in, I can sell both of those at 60 cents at least, probably squeeze another nickel out of there, get $1.25. And that's basically the range for the past 3 months. I think 42.70 something, 42.82 might be the all-time high. It's definitely the high for the last 6 months. And the thing is that the earnings gaps that Cheesecake Factory typically experiences really aren't that big.
No.
May 8th of 2024, we get a 7.5% earnings gap, and that's the biggest one in the last 3-4 years. So, yeah, I actually kind of surprised myself in liking this one.
Yeah, me too.
Awesome. Well, that's what we have the show for, so that we can have some good names brought to our attention, and then have our gurus double down on what they like in it. So AJ's liking some of what he's seeing. Dan's liking some of what he's seeing. So Cake, That's our pick of the week. So keep that one on the radar. We've got 3 other names in the wheelhouse where we'll get some quick analysis. Dan, you good to stick around and give us some more insights?
Yep.
All right.
I'm here, man.
All right. We've got some pretty well-known names, I think. We'll start with Laura in Atlanta, Georgia, interested in tech behemoth AT&T, ticker symbol T, which has earnings coming out on the 23rd of October before the market. AJ, what are you seeing on your end?
Well, now here's a case where, what Dan said is our typical thoughts about premium going into earnings. No way would I think about on this candidate, not even looking at the pattern, but, this is a candidate that I would not lock myself up into some sort of, timed theta decay position, especially with earnings right around the corner. That would be, kind of insanity, right? We don't do that unless the pattern, you can go back to previous earnings, see that, the stock just shakes it off, and you with one of these range bound strategies that auto adjust, you got to make sure you get all the legs in place before that does it. So I would be looking, at some sort of earnings play on this. And so I'm going to default to Dan. What would we want to look for? What are some of the things we might want to look for on AT&T if we wanted to do some sort of trade around earnings? And would this be one that would even be on your radar, or would you punt on it early on?
Earnings trades are always on my radar, AJ.
Yes.
And AT&T is one of the stocks that I follow. It's kind of been in this range for a bit, although we did have a pretty big down day through the 21-day moving average yesterday. As far as an earnings play, for me, the only way I trade those is literally the session before earnings. Mm-hmm. So, in the short term, I'm basically just long the stock to collect the dividends. It's got a high yield. Mm-hmm. So I would be keeping this one on my radar until Tuesday, October 22nd, because their earnings are Wednesday, October 23rd before market open. And I'll definitely be analyzing this one because we see the implied volatility of the October 25th expiration already ticking up. So we could really get that sort of juicy disparity in front vol versus back vol with this one.
What you're saying, you won't really know until we get closer to earnings, right? Or yeah.
Yeah, as an earnings play, it's a holding pattern until we get right up on it. But in the short term, honestly, man, I just like holding the stock because you get that dividend yield.
I got to throw out there, Sip, that, some folks who are like neophyte, this is why you really want to check out what we're talking about next Wednesday, because some folks, they go up on the internet, which is sometimes, the interwebs, you do a search and, they're going to throw God forbid, a near-term straddle or strangle on this. And what's going to happen, because straddles and strangles, if you go far out in time, they get very expensive. So people are going to look near term thinking, oh, if this thing breaks up or down, it's going to be a winning strategy. But what we're talking about is that the vols are completely, people are buying options because that's what hedges them. And if you buy a straddle or strangle, you're buying a call and a put, right? You're right in that mix. You haven't put yourself on the correct side of the equation. In other words, I always call it the smile curve. There's this smile curve of extrinsic value, and it's really up there. You're paying top dollar for that straddle strangle. When that earnings play goes past and all the implied volatilities drop because all these people are like, okay, I don't need these insurance policies anymore. I'm selling them. Now you're the proposed breakout, whether it be up or down, to make your straddle or strangle profitable has to be even bigger. And a lot of times you see those trades fail because people don't realize about this volatility rush that has happened, right? And they buy those, if you're going to do some sort of strategy like that, you got to buy the expensive ones that are far out in time, like we're talking about as the covering position for being able to sell these, inflated front month options. You got to use those options if you're going to try to play a directional play on this. It's not as easy as it thinks. It's why you have to get somebody like Dan to show you the different strategies that you use in order to capitalize this and what you have to look for in the underlying symbols. So just be really careful. I know that a lot of people are like, oh, calendar spreads, that's something I don't understand, but why don't I just buy a call and a put? And, it's not as easy as that. Each one, strike price and expiration date on options, people don't realize that can change the whole personality of the option. An at the money near term option behaves so much differently than an at the money, far out, an at the money far out in time option, or a deep in the money option, right? These options respond different to different stimuli. And you got to understand it's not just the underlying symbol price that makes an option strategy work. And so if you're new to options, you really want to join us on next Wednesday before you start to weather this earnings season. You got to have these tools that Dan can give you under your belt.
And the link to that, once again, is in the chat. We've got 2 more names in the speed round.
Oh, yeah. Sorry. Sometimes I get on my soapbox there, Sip. Sorry about that. Keep us rolling.
Speed through them. Andy in Columbus, Ohio, is interested in Mattel, ticker symbol MAT, with earnings also on the 23rd after market close.
Yeah, I'm going to, again, for putting on any sort of theta decay play, any sort of, letting time pass by, I'm going to say you got to wait till after earnings. We can't even, look at the pattern right now. This is setting up perfectly for, one of Dan's earnings plays or some sort of earnings play, but it's not going to be a play you want to get obligated in and, hoping that it stays in a certain range while the clock runs out. That's not where you're at right now. This thing's consolidating. It's getting ready to do something. I think the investors are on hold, sitting on their hands, waiting for earnings. Dan, what do you think?
Yeah, this is a crazy one for earnings. And honestly, I can tell you right now, probably one I'm going to avoid for earnings. And I'll tell you why. Because, when it comes to volatility, like AJ and I are throwing out all these terms that might be new to some people or not to some others.
Word salad.
Yeah, exactly right. But there's 2 types of volatility, right? There's the volatility that we think of intuitively, how much the stock moves around. Mm-hmm. And then there's the implied volatility, which is basically how cheap or expensive the options are. So with my earning strategy, that's what I'm always measuring. Are these options too expensive? Are they overpriced? So I do a time spread, or is it one of those rare situations where they actually are underpriced, where maybe I will do something different? So the thing is with Mattel is that their past earnings gaps are all over the darn place. I mean, last October, it gapped 16.7%. The February before that, it gapped 11.4%. Quarter before that, 8.6%. But, the last 3 quarters, 2.9, 2.6, 1.1. And that's like the tricky and dangerous part of this is, you don't know whether you need to be buying or selling volatility, because if you put on a calendar, a time spread going into this, and it's one of those times where it gaps 16%, you get run over. If it's one of those times where it gaps 2%, you're in great shape. So those ones are a little bit tricky. And that's just one of the tips that I'll give you in advance of next week, because that's a good tip.
Yeah, so this is a name that we're going to avoid, and sometimes that's what we get on the show. We keep it true to what the pros and the gurus are seeing. So Mattel, hey, not this month. We're going to look at some better opportunities where we have more favorable situations. So maybe we'll get that in our third name here. Cindy in Phoenix, Arizona, wants to know what's going on with Southwest Airlines, LUV, earnings on the 24th before market open. AJ, starting off with you, what do you see in Southwest?
Same thing I'm going to say with the other three. We're approaching earnings season. Um, I like Southwest a lot. The airlines tend to, they have a little bit of micro movement throughout the year, usually when something happens in the headlines. But otherwise, they're just kind of one of those companies that's a staple that has to be there, that makes, one thing with airlines is they tend to scrape by with margins, typically, fuel margins. If price of fuel goes up, it kind of ruins their whole business model, things like that. So you can kind of count on them sometimes through earnings, but I'm going to say that I'm not going to put any sort of theta decay, any sort of, one of our premium selling positions on this until earnings. Earnings is just next week, right? So I can wait a little bit on that. This is before market open on October 24th. So this is not next week, 2 weeks from now. So maybe next week. I don't even know what day it is. No, 2 weeks from now. So, I'm going to hold off on, modeling out any sort of time. I can model it out, but I'm not going to pull the trigger on anything until after earnings on this one. But yeah, I'm curious what you think about, possibly, watching this for an earnings play the day of or the day before.
Yeah, this is an interesting. I mean, if it wasn't for earnings, I would really be looking at some of these income trades. But because of earnings, I mean, it's just, we would have to put it on with an option that expires before the October 25th expiration, and you just can't sell far enough out, in my opinion. So leading up into earnings, I mean, this can potentially be a really, really nice one. I mean, the October 25th expirations volatility is already climbing. It's over 39% just for the at the monies. And historically, we don't really get too many huge gaps. We had an 8.5% gap. We had a 6.9% gap, but most of them are pretty small, which we like going into earnings. Because remember, like this earnings trading system that works, like the reason that it works is because you're looking for these nuances. You're looking for this fine line where the options get so expensive, but if they get expensive because people are fearing a big move, but if there's too big of a move and they were right, you lose. So it's sort of a market psychology beating exercise. And this is one where there's a reasonable chance that we might be able to do just that with this one.
So just so I get clarity, and this is what I understand, what you're saying is it's predictable that ahead of something that's uncertain. Again, this is the psychology that I want my folks, you guys who are watching the AJ Brown Show, think about your own personal situation. If what analogy? If this will be timely. If the storm is coming, right? You're going to take precautions. You're going to buy, I don't know if you're going to go out and buy extra insurance, but you're going to buy the insurance of going down to the big box store, buying some plywood, putting it on your windows. You're going to take the precautions in order to protect yourself through the storm. And then, what we find is a lot of the times the storm just passes by and there's no real damage, right? There's no real movement. And you just, at that point, you take the plywood back off and you remove all the protections, right? And that's what a lot of people bank on. What you got to watch out for is, you becoming complacent and thinking that, the next storm is not going to do any damage, right? So you got to you got to do your research. You got to make sure, all the that people are still going to be protecting themselves. They're still going to be driving those option prices up. So you can create this trade off of it. but you also want to pay attention really closely to the way that the storm is coming in to make sure that, it's going to be one of those ones that goes overhead and that the protection wasn't really required. Do I got that? Does that analogy resonate at all, Dan?
Oh man, I love that analogy. That's so great, man. That's.
I tried.
I love it.
All right, so next Wednesday, we're going to be digging into
excuse me, guys,
things, how the Fed might affect earnings season, how you could take advantage of this volatility rush and crush, 7-step process to identify these things, and 3 reasons why you can't ignore the earnings season. That's going to be next Wednesday with Dan. The link to that is in the chat. Dan, thank you for taking some time and hopping on the AJ Brown Show.
Let me say to everybody, you should just go register no matter what, because there will be a replay. Now, if you can be there live, you definitely should. You should put it in your calendar. You should write it in an ink, not pencil, because you'll have the possibility to do live Q&A. So if something doesn't make sense, write that in there. You can get your answers. But everybody on this AJ Brown Show right now, or if you're listening to the replay over the weekend, you need to go register for this webinar, because at least you'll get this information. I know I'm going to be all ears looking to optimize my earnings type of trades. So I'm going to be there taking notes. So everybody should just register right now while it's on your mind. And if you make it, that's great. Be able to be part of the live Q&A, be able to get the information right then and there, put it in your calendar. But again, if for some reason something comes up and you can't make it, we're going to provide you a replay. So just get your name on the list so that you can get the replay. Because if you don't put your name on the list, you're not getting any replay.
Awesome. Dan, thank you once again for joining us. We'll see you on Wednesday. Have a good weekend.
As always, man, that was awesome. See you soon.
See you soon. Thanks, gents.
All right. Big thanks to Dan.
He called us gents. He doesn't even know.
Maybe gents is different than gentlemen. It might be one of these new Gen Z terms. I don't know.
Oh, like cringe? I started calling things cringe, and my wife rolls her eyes every time I say cringe.
That's not one that I use, but
I told her that she has Riz.
Okay, AJ, let's get some of these acronyms into our TikTok videos so we could appeal to a younger audience.
I said, you got some Riz. And she's like, she rolled her eyes 3 times on that one.
All right, great show, AJ. Big thanks to Dan once again. We've got an awesome webinar coming up. If you haven't checked out AJ's quick links page, the link to that is in the chat as well. Hit us on the socials. You get at AJ's trading toolkit, the webinar links, our social links. A bunch of good stuff is there, so head on over and check it out. Sign up for the webinar. Still at market highs, AJ. Looks like we're going into the weekend very positive. Any final thoughts?
If you're interested in Pfizer, you should be on next Wednesday's webinar. Any thoughts? Yeah, I'm looking at how things mature. I mean, like I said, I'm cautiously optimistic on this uptrend, but I am seeing that people are ready for it to reverse. Sometimes there's that self-fulfilling prophecy. People put so much, they're so worried about the reversal that they actually cause the reversal down. So we just gotta get through this month of October, see what's going to happen, get through this election, get through some of these skirmishes, and just trade the data as it comes. Just like the Fed keeps saying, we're data driven. Trade the markets as you see them in the charts, not as the talking heads on TV tell you.
That's right. All right, AJ, thank you again for your time today. Thank you to our lovely audience for tuning in. Please show some love. Hit that like, hit that follow, hit that subscribe button. We'll see you on Wednesday. But if we don't see you on Wednesday, we'll see you next week on Friday's show.
You all have a Riz.
Yes, everyone. Riz, cringe, and all that jazz. Everyone have a good weekend. We'll catch you next week.
Bye.
For tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe button and we'll get you fresh content daily.